passionate about the information that we actually have, the power to actually really help people. We're going to be discussing some strategies that I use to really make sure that we can offer our clients the best in retirement and tax-free strategies. So what I want people to realize is that, and this is how I talk to my clients on the radio, what if everything we learned about the financial arenas was not true? What if everything, you know, that we traditionally do, like 401ks, 403bs, taking our money to the bank and all of those things, what if it wasn't really true? And what if it wasn't what the rich people was actually doing with their money? Wouldn't we want to know what they actually do? So the infinite banking concept, that's what we want to learn more about, and we want to help people understand how that process works. So what I did in the Mack method, we'll get into that. I guess, Colleen, should I try to share my screen now? You want to do that now? Let me that up. All right. All right. I don't know if Colleen and can everybody see? No, not yet. All right. So let me get out of there. Let me go here and share the screen. All right. So can everybody see this now?
It's working.
It's starting to work, huh? Love when a plan comes together. All right, so can everybody see the Mack method? Do I need to go full screen or this is good? Thumbs up?
We can see it.
All right, okay, cool. All right, so question is the Mack method. Why did I create this? Well, I created this because a lot of the information that, since I've been in the field, I'm learning as far as traditional retirement, as far as IRAs, 401ks, TSPs, deferred comp, these plans, a lot of people don't have the full information. Now, some people understand it a lot better, but in most cases, everybody is a novice. Most people are a novice when it comes to the retirement. And what they don't realize is that most of the money that they're saving in these traditional plans is going to be taxed forever. So how I do this plan and how I help people is I educate them on what is actually going to happen. We're going to fly through this, but we're going to leave enough time to ask questions and how to get started. And everything that I want you to know is when we're talking about these plans, everything that we do is guaranteed, and everything plan that we use, you know, you can't lose money. So a lot of people are afraid of new things. A lot of agents are unaware of everything that we actually can do for people. So I want to really let agents know about the power that they have to really help people and change lives. So let's dive right in. All right, so Mack method, the reason why we did, I think I'm gonna go full screen. I don't know, it moves fast. Can you guys see the whole screen? Everything's good? Okay.
Yeah.
All right, the Mack method is designed to have a tax-free retirement. What is that? First of all, can we actually have a tax-free retirement? And we can. We can. I mean, first we're going to pay a little bit of taxes, but the problem is with most of the plans that we're talking about and what they set us up is that we pay taxes forever. And a lot of people are not realizing. some people even believe that once they turn 60 or past 59 and a half, they won't pay taxes anymore. And that's unfortunate that people believe that, but there are people out there that believe, hey, okay, well, I'm good because, I'm 60 now and I don't have to pay taxes. So let's dive in. What we do as far as the team is we educate people on the 401ks, 403bs, IRAs, TSPs, deferred comp. These are all qualified plans. What I want people to understand that, and the joke that I kind of tell is that these plans are qualified to pay the government, because that's what's actually happening. We are going to pay taxes on this money forever. And forever is a long time. And if we can combine a process and a strategy to at least have the later parts of our retirement tax-free, I think that would be better for our clients. How do we do that? Because they've been told that 401ks and IRAs are the best things since sliced bread. So how do we battle and go against the grain? Because, I mean, Bill, you're there, LaRoy, I'm here. And it's like, these guys don't know what they're talking about. If I say, don't, completely fund your 401k or, only fund what they're matching, they can't possibly know what we're talking about. So that's why we use third-party verification. This video, I want everybody, and Colleen, you recorded this so they can get this information. We're not going to play all these videos, but I wanted you to know about these videos that's out there. So like this video right here, 401k failure. It is a combination of media telling you that the 401k is not designed for you. It's not the best thing since sliced bread. It's not, the all be all, but that's what most Americans know of. And unfortunately, some of the most Americans, that's the only place they're saving. They're saving in the savings account and they're saving in the 401ks or the qualified plans. So the 401k failure, this video is Time Magazine, Frontline, CNBC, and 60 Minutes. So these are the billion-dollar organizations that most of us get our media from, okay? And I want you to use this because you don't have to be, the super guy and try to be smarter than the other people in the room. All you have to do is use the power of CNBC, Time Magazine, and Frontline to get your point across, because this is what has been happening, has been happening for years. 60 Minutes, this video is about maybe 13 minutes long, but it really goes into the fact that most of our money, during 2008 and 2009, there were people out there that were really, really suffering. And about 3 to 4 minutes of the videos, there's people who are afraid to open up their statements. There's people who are crying because they're looking for work and they're 60 years old and now they have to work till they're 67, 60, 70 years old because they lost the majority of that money. This is nothing that we made up, and then, we go back and forth with, okay, well, it'll come back. That's what we're told. But in most cases, if you are about to retire and that money was gone, if you lost 40 to 50% of your money, there's no way you can retire. So the point that I want people to understand is that we have to educate our clients on how to protect their money and how to alleviate as many taxes as we possibly can. All right, so what I want people to understand is that we use a vehicle called the index annuity. All right. What we do when we use the index annuity, we use the index annuity to protect the money that they're having, that they're risking every single day. When you have a plan like a qualified plan, an IRA, a 401k, or qualified plan, you are risking money every single day. What if there was a strategy where not only is your money going to be 100% protected, it's going to grow, and you will be able to receive 10% of your money totally, penalty free, to move into the infinite banking concept. Okay, now that's a lot, but I want you to understand that this strategy you literally can use to start building and making a larger purchase in your infinite banking concept, with the power being that, in this plan, it's a 10-year plan, but for the next 10 years, even if I don't have any money to add to my plan, I can literally take 10% and move that over to my infinite banking concept and only be taxed on the 10% that I move over. But after that is done, I'm not going to be taxed anymore. My money is growing in two places. My money is growing in the index annuity, and it's also growing in the infinite banking concept. So I'm creating the best of both worlds, where you are making money and never losing. The other powerful thing that, I haven't looked at these slides in a minute, but the annuity that we use offers a 10% bonus. So imagine you have a client that has $250,000 in an old 401k, and he's sick and tired, or she's sick and tired of watching it go up and watching it go down. The other thing that I want to talk on and touch bases on is the market is about to correct itself. We saw in March how the market tanked, but we've been making money. So it came back, and so that's what some people say, okay, but we're making money. People, the way the market works is in trends. And when we have bulls and bear markets, they're usually timed around 7 years. The bull market does not go that long, but it has. Right now, the bull market it's shattering records. So what goes up, must eventually come down. And with the way that the government is spending money and everything that's going to happen, there is going to be a correction that they predict is going to be worse than 2008. So now, if I have no guarantees, and that's the whole problem, in my plans, the majority of the plan that I have, it has no guarantees. In the index annuity, there's guarantees that you'll never lose any money. In the infinite banking, there's a guaranteed of 4% growth plus dividends. So once again, never losing money. Now, so let's go. All right. Now we're talking about the index annuities. Now, a lot of people may be intimidated. I don't know if most of the team have sold index annuities, but an index annuity is nothing but a contract with the company that's going to protect your principal and provide you guarantees. That's all it is. Sometimes, a lot of people like to make it a lot more difficult, but it's not. It's pretty much that, and Dennis and I, can help you if you are not doing index annuities and things like that, and you want to learn more. about offering that product, we can definitely help you. Here's another video that's really simple. It's like 4 minutes, and it explains what an index annuity is. So we make it pretty simple. Send your client a video if they're not, or if you're not confident. Like I said, Dennis and myself can be here to help you, walk you through this and get you ready to help your client completely. So like I said, we also have an index annuity video, which is very, very simple. I think it's 5 minutes long, and these videos are on YouTube. So everybody, clients, everybody's educating themselves, and YouTube is incredible. So there are clients that say, oh, I can't stand annuities. I hate annuities. I know you might have run into some of them that say, oh, I can't stand, or maybe you don't even like annuities. But the difference is you need to know what type of annuity. There are different annuities. There's fixed, there's index, there's variable, and there's income annuities. So when most people say, I can't stand annuities, either they had a fixed annuity or variable annuities. Variable annuities is where you can actually lose money. In a variable annuity, the fees are ridiculously high. And most people have variable annuities, and that's why they can't stand them. You have to educate your client, because think about it. If I had a client and he had $250,000 and he was losing money, and I said, hey, I can stop you from losing money completely. And not only that, I'll make you $25,000 within the next 2 weeks. You'll never lose it, and you won't pay a fee. That sounds really powerful, right? But we back it up. Everything, like I said, we talk about, everything we do is in writing. So a lot of people never heard of that. They'll call me a liar as soon as I say it. Sounds too good to be true. But let's think about what sounds too good to be true. The infinite banking concept has been around for over 200 years, and it was not too good to be true for the rich people. Why is it too good to be true for us? This is what they use. If I can use my money and continue to earn money while I'm using it, that is the best thing since sliced bread. So, all right. What are the pitfalls? When I talk about you being taxed forever, literally, let me go back. Got too excited. Most of us as professionals have heard of RMDs, required minimum distribution. In my earlier career, when I started and I was learning about RMDs, I was pretty much pissed off about that, because it's like, how is it that I'm going to build all my money and I've done well? I've listened to it, all the professionals, Susie Orman, Dave Ramsey, whatever. I listened to all the professionals, and now that I'm 70 and a half, it's 72 now because they changed the laws, but I'm 70 and a half, now it's mandatory for me to spend the money that I've been saving that I want to leave for my grandchildren or my children. How is that fair? First of all, how many of us want to be told what to do at 70 and a half or 72 with my money? All 401ks, 403bs, TSPs, deferred comp, IRAs, when you turn 72, it is now mandatory for you to spend that money. And if you don't spend that money, it's a 50% penalty, along with the penalty of not spending that money. It's a 50% penalty. And guess what? As you grow older, the penalty goes up. So you pay a certain amount at 72, you're expected to pay an increased amount at 73 and 74 and 75. And as you get older, They're taking the money from you automatically. How is that my plan? How is that going to better my life to be taxed forever on my money? Now, it is our duty to teach our clients to pass on a legacy. And if you ask a simple question, would you want to be taxed forever or taxed never? In the infinite banking concept, we can do that. We can create a tax-free income or tax-free retirement for the rest of our lives, not paying taxes on that money as it grows, and also not paying taxes on the money when we pull it out. Most of us, who worked in the corporate world has had a 401k. How difficult is it to get that money? You can get a loan, you can have a hardship, and that's pretty much it. Or you can quit your job. What the government, not just the government, but the world has taught us is that it's okay to give up control when it comes to that money. And they put things in place to make sure that you not touch it. Touch your money before 59 and a half, 10% early withdrawal penalty plus taxes. They are ensuring, and this is what I want you to explain to your clients. Ask them this simple question. Would you want to be taxed on the seed or the harvest? If you had a choice to be taxed on your seed or your harvest, which one would you choose? Most of us would choose seed because it's smaller. But what did the government do? They set us up to be taxed on our harvest. That's why you're not taxed when you're putting in the $200 a month, but after that, after you've done it for 25 to 30 years, now you have a significant amount. That's why 59 and a half is there. That's why 72 RMDs is there, because the government has $30 trillion in deficit. The debt is $30 trillion. I always kind of educate my clients and tease them. And if I say, like if I gave Colleen $1 million every day since Jesus was born, she still wouldn't have $1 trillion. That's how big that number is. The only way the government is going to get that money back is to tax your retirement. So I know it's not a popular, saying, but that's what we're obligated to teach our clients and show them this. All right, so once again, people need to know the truth about their retirements, okay? The concept, you're going against the grain because this is what people have been taught their whole life. But you have videos and you have expertise and you have documentation to show them that this is not the best. Because if you ask a simple question, do you want to be taxed forever or taxed never? Do you want to be taxed on your seed or your harvest? These questions, people, your clients know, and they know the answer. So once we start educating our clients on that, this is how the concept works, okay? Now, as I was saying, when we're talking to our clients, you want to ask them, what problems would you like for me to help you with? How committed are you to fixing the problem? Because once you do a fact finding with them, you're going to find those problems. You're going to see those problems. And you are the professional. You are the expert. Most of this information people have never heard before. And unfortunately, a lot of financial advisors and insurance agents never heard of it either. But now you're having the opportunity to learn things that you can actually teach your clients to create a legacy of wealth that they can never outlive. And so these are kind of some of the questions I ask my people, my clients. Okay. All right. Now, the Mack Method has two strategies for you to get paid twice. Okay. So you're going to get paid on the annuity, and you're also going to get paid on the infinite banking or the whole life product. Okay. What this does is those people who say, okay, I want to put $100 a month in it to build my bank. Those are not really your clients, you know, because they can become your clients, because once you educate them on, you are no longer looking for the most insurance I can get for the cheaper price. You're looking to build something so that you can use it. What's sexy about the infinite banking, because life insurance is not sexy. It's not. I mean, the only thing is, okay, I'm getting life insurance. And what we were taught is that get life insurance just in case you die. But that's not what the rich do. The rich buy life insurance for the compound interest and the access to their money. So let's dive in. Let's ask a question. How much money do you earn in the bank? 0.0.1. How much do they make? 19 to 30% on your money. In your own bank, you're earning 4% compound interest. Okay. You have tax-free assets, and you have access to the money within 30 days. So if I have a client that has, let's go to the next slide. All right. So here's an example. Let's say Mary, I put May or whatever, it's supposed to be Mary. So she has a 401k, an old 401k with $250,000. Okay, she's 60 and she can move her money. She will make $25,000 within 2 weeks once she's approved. Okay. She's going to move $25,000 into the infinite banking concept until the money is gone. Why? Why? Because, hold on just a sec, guys. The reason why she's going to do that sorry, I had to respond to my painter. The reason why she's going to do that is if she had $250,000 and it continued to grow, she would be taxed on that money forever. Now, the company that we use is literally allows us to take or to receive a check before the policy even starts. So what we can literally do is say, okay, we're going to start this plan. Before we start this plan, I will need you to send Mary a check for $25,000. And we're going to start the plan with $225,000. What Mary is going to receive is 10% bonus on the $225,000. She's also going to start her infinite banking concept with $25,000 a year. If she wants to put in more, she can put in more. But what's powerful about that is that she's going to pay taxes on that money. Let me ask you another simple question. Is taxes going to go up in the future or down? We all know that taxes are going to go up. Just like I said, the government owes $30 trillion. So here's the power of what I'm talking about. She is now moving $25,000. She's only paying taxes on the $25,000 that she moves over until now she has 250 or 300 because it's growing in the index annuity and it's growing in the infinite banking concept. But now, 10 years later or 11 years later, all the money that she started off with is now 100% tax-free. And she has access to this money without any rules. No 70 and a half anymore, no 72 RMDs, none of that. She has access to her money to build her wealth. Now let's talk about compensation. What we do is very important to people, but it's also very important for us to get paid so that we can continue to help people. Because if we're not in business to make money, then we can't really continue to help people. Because if we can't pay our mortgages, how are we going to advise people on financial literacy? So we have to get paid. But here's an example. So if we move $250,000 from Mary's account, who was sick and tired of losing money, now we set up a guarantee that she can't lose any money. We made her 10% on her money day one. What you receive in commission is $15,000 on that at a 6%. Now, because we now are putting $25,000 a year, you also get paid from the whole life product. And because the way we structured it, this could be additional $13,000 for you. That's $28,000 on one case at 250. We just did a case for 700,000. Okay, so you can see how much money we made. But not only did we make money, we set the client up to be successful and not pay taxes for the rest of their lives and leave a legacy. Here's another thing that I didn't talk about. If you pass away with a 401k, most of the clients don't realize that that money is going to be taxed twice. What do you mean, Mr. Mack? Well, it's going to be taxed twice because first, you never paid taxes, so they're going to tax your estate. But I leave my money to my husband, who's also working, and I left him $150,000. Now that becomes ordinary income. So now he's going to be taxed at ordinary income plus the money that he makes, which put him in a higher tax bracket. When you have the infinite banking concept, if that person passed away the first year, the $25,000, depending on age, bought you, whatever it was, 300, 400,000, $1 million in tax-free benefit that you leave your family. All right, so I'm going to open it up for questions now. All right.
So, Mr. Mack, you can take money out of your 401k,
Yes.
move it into an index annuity.
Yes.
Is that taxable?
Great question. When you move that money in from a 401k, that money is not taxable. It's not a taxable event. Here's why. Because when you move it into a 401k, from the 401k to an index annuity, it becomes an IRA. So it's like to like. So it is not a taxable event. So because we know taxes are going to go up, right? We know taxes are going to go up. But if you ask, some people say, hey, once they get educated, it's like, we already know, I'm going to just take the hit. But some people will say, I don't want to take a hit on $300,000. I would rather take a hit at 30 grand a year for the next 10 years, which makes, sense. But when we move that money, that $250,000, 300, 500,000 or whatever from the 401k or IRA into the index annuity, is not a taxable event. Okay. Any other
Oh.
questions, guys? Yes, Bill?
Well, we know it's difficult to have people move money out of like a 401k or an investment IRA or something in a bull market, which obviously we're well into and been a long time. And you and I could argue all day long about how long this is going to last.
Right.
As well as we could probably have a good discussion on how much taxes are going to go up or where the taxes are going to come from. I agree with you. They're going to start hitting retirement plans because we know baby boomers have $68 trillion to pass along.
Absolutely.
So we know that's probably the area they're going to target the most. But so how do you do you also bring up the fact when you're talking about this about how an IDC could be used for, say, a debt elimination process?
Yes, we talk about, so the Mack method is just the beginning of all the things that we can actually do. Because when we, like, let's say it's a bull market, but that's a very good question, Bill. I mean, and you brought up a great topic. But what if I grow my 250,000 to 500,000 and taxes is now 55%? And see, a lot of people don't realize that, and here's another thing I use in my seminar. In 1962, everybody's gonna win a wet noodle or whatever, a wet dollar. In 1962, for a married couple that made $250,000, 1962, that was not that long ago. What was the taxes? What was the income tax, on that? Was it 15%, 20%? Can somebody tell me, how much was it?
I don't remember.
Okay. What do you think?
90%.
You're 100% correct. This guy probably been to my seminar. It was 91%. 91%. Now, does time repeat itself? We already know taxes are going to go up. The politicians just don't want to be the one left holding the bag when they raise the taxes. But $30 trillion, there's no choice but for it to go up. All right, any other questions, guys? I'm here to help you. So there's no wrong questions. So let's jump in.
How do we start introducing them and taking them through the concept of infinite banking? Because I just read the book and I'm just trying to figure out the best way to introduce it to clients and get them on that path.
Great question. It starts with education. It starts with asking them simple questions. How much control do you have when you're 401k? How much money do you earn how much money do you earn in your savings account? So the infinite banking has a guaranteed of 4% compound interest. Your bank is guaranteed to pay you 0.1%. So that's the right conversation right there. And asking the simple questions. Do you want to be taxed forever, or do you want to be taxed never? Are you aware that if you pass away with your 401k, it's going to be taxed twice? Do you think taxes are going to go up, or do you think taxes are going to go down? All of these questions are geared to the infinite banking concept to help them have a better strategy. Do you want to do what the rich? Warren Buffett says if poor people did what rich people did, they wouldn't be poor anymore.
Hey, Mac.
You know what I'm saying? Yes. James?
Yeah, you might have feedback on this because two of us are in the office at the same time. Back up over how it's taxed twice. So if you die with 401k, I get the fact that you're paying taxes on the transfer, but then it sounded like you said your spouse would pay on their income, but that's not your 401k.
So what happens is whatever's left over becomes ordinary income tax.
How would it be left over if all of it's being transferred?
Well, it's not going to be transferred. They're going to tax the estate. You understand, James? So if a person dies with a 401k, what's actually happening is they're going to tax the estate. After they tax the estate, whatever's left over that you leave to your spouse becomes ordinary income. And that's going to be taxed as well. Got me, James? You're muted. All right. Any other questions, guys?
Can we do this concept with someone who, let's say, who doesn't have a 401k and just like getting started?
Absolutely. Absolutely. This is for people who have qualified money, but it doesn't have to be $250,000. It could be qualified money in 20 grand. It could be money in the savings account. Because thinking, people, you'll find that there's trillions of dollars in the savings account and they're earning 0.1%. And they're saying, well, at least it's safe. It's not. It's not safe. You're losing money. Inflation is 3.2. If inflation is 3.2 and you're earning 0.1, you're losing money. So you have that conversation with them, like, don't you want more? Well, what if it's, I need liquidity? What if I need my money? That's perfect. If you move $50,000 into the infinite banking concept, and I told you 30 days later, after you got approved, you had access to 60 to 90% of that money to take out tax-free while you earned compound interest on the entire 50%, 50,000, it's a no-brainer. You can't say no-brainer, but it is. Think about it. If I had $50,000 in my bank and I wanted to pay off my car, which was $25,000, and I pulled $25,000 out of my bank by basically going to my account and typing in, send me 25,000. Now I paid off my car, but I'm still earning compound interest on the 50,000, even though I took $25,000 out. This is what the wealthy people do with their money because it just makes sense.
So where does the 10% bonus come from?
The 10% bonus comes from the index annuity. So imagine people who are losing. And I said, hey, not only can I stop your bleeding, but I can try to get you back to where you started. You lost $10,000, you got $100,000. What if I was able to move that $100,000 and make you $10,000 within a couple of weeks, not paying a fee on the money and not ever losing $1. Yes. Any other questions, guys?
Back to Jawan's comment question about, do you have to have qualified money? That's the great part about this is really this can work for anyone. LaRoy, what you've been talking about today is geared more towards maybe people closer to retirement, have a larger sum in their 401k, have some qualified money. But at the same time, Juwan, you can also do this with people just starting out, people who want to put in a few $100 somewhere. The
Right.
key really is the mindset, the questions that LaRoy called out at the beginning of, how committed are you to fixing this problem? If they're committed, this is going to work great for them. Are they going to pay themselves first when, LaRoy talked about, I've heard him present this before, and he said one time, why do we rank ComEd, or why do we rank our furnace, or why do we rank our housing needs higher than we rank ourselves? Why are we going to pay that stuff off first before we pay ourselves? And I think that's a great point of, it's a mind shift. It's a mind adjustment of being our own banker. We got to pay ourselves first and put a value on how much you're worth. And so to go back to what Joanne said, this can work for anyone, any age, any place in their working years. It's all about how committed are they to the process and to making it work.
Absolutely. Colleen, that's a great point. And Jawan, here's another tip that I use. I ask people what they make an hour. I ask people what they make an hour. And if they tell me, let's say I make $20 an hour. Do you know if you paid yourself 1 hour per day, that would be $400 a month? Now, are you willing and how committed are you to changing your life? Now, that 1 hour, because you asked the client, hey, if I told you that you can be financially successful and all it took was 1 hour per day, would you do it? They're going to say yes. They're going to say yes, and then they're going to find out that's $400 a month. And they're going to realize, wow, $400 a month if I paid myself 1 hour? And just like Colleen said, it's who is the most important on your bill list. Why do you come last? Why is it ComEd, Sprint, everybody else, and you get to keep what's left over? Why is it that way? And we're changing people's mindset to pay yourself first, because what we do is we put money in the savings account and we earn 0.1 when if you put it in your own bank, you're earning 4% compound interest plus dividends. Why do we do that? It's because we were taught to. For the, people who had great schools and the Chase came out to educate you on the financial literacy, they told you, you gotta get a bank account, which a bank account is better than the currency exchange, but not really. 0.1%, people. CDs, 1%. Really? But I get a 1099 at the end of the year to pay taxes on the 1%. What did I make? Come on, guys.
When I brought this up this morning to a group, one of the things that there was interest in the IBC, and I just said, be your own bank. And they're like, well, how does that work? I said, imagine instead of borrowing from a bank and then paying them back and never seeing that money again, you borrow from yourself, your own bank. And let's say you bought a car for $25,000, it was $250 a month for 4 years. And you paid yourself back the $250. After 4 years, you own the car, or you own the car outright anyway. But now you've got the money back that you paid out for the car, and it's been earning compound interest for those 4 years. And there's a way to actually show that growth through calculations. And then that clicks. So I talked to a group of 9 people this morning, and I have 2 appointments next week.
That's awesome. That's awesome, Bill. People, what we're putting out here is so very, very important to people because we've never taught this. And if you take a step back, earning 4% compound interest versus 0.1, paying taxes forever versus paying taxes never, being able to, take because there's a lot of people out there that's sick and tired of watching their accounts go up. And the closer they get to retirement, they don't want that. But there's so many people that are not educated that if I move this $300,000, I don't want to be hit tax-wise right away. They don't realize that not only will you not be taxed, but I'll make you 30 grand in 1 week. And the brochures and everything that we use says this. So you're not the Barry, the Madoff. You're not that dude. You're not that guy. You are somebody that's literally bringing education to change their whole financial life. You are someone that everything that you talk about is in black and white. This is just a program that we never knew about, and we can do that.
Is the index annuity a One America product?
No, it's not. we can, we'll talk to Dennis. Dennis can get you set up. People who want to get this product, we can get you set up to get contracted with this company.
Can we do joint work with you? That's my last quick question.
Absolutely. That's right, Colleen, right?
Absolutely.
Absolutely. Yes, you can.
I need help into contact for sure.
Gotcha. The other thing too that we mentioned that Wella and myself, with the radio, people, we just did the calculations, and I didn't even tell you this, Colleen, but from May 27th to now, we have over 170 leads.
Wow.
170 leads. Can you imagine 170 people calling you to get this information? We didn't call them. They called us. We have their information. They called us. They want to know about this plan. And I didn't even go into the Mack Method on the radio. I was talking strictly about the infinite banking concept. So 170 people, that was 5 weeks. And we're going to continue to go on. So we need help getting the message out. My goal is to educate 100 people a week. And they should all, just like Bill, just like talking to these people, these 9 people, they just didn't realize what they didn't realize. And it's up to all of you to teach them about what's out there. And I mean, this could be huge. I mean, on that one case, it was $28,000. Okay, just think if you did 4 of those a month, that's $112,000. And the best thing is, I made $112,000, but I help people have a tax-free retirement and not be in a vehicle where they're going to continue to lose money for the rest of their life. So it's a win-win. The reason why I'm passionate about this, I did 20 years in social services. So I've been helping families and, kids. That's what my background is. So when I found this, and I found how many people don't know what they don't know, it's, I'm passionate about getting this information out. Changing people's lives. A lot of insurance agents don't recognize the power that they have because they haven't been taught the power that they actually have to change people's lives. And that's what I want to do.
Awesome.
Okay. But yeah, anybody who wants help, want to reach out to me, Colleen, you can share my information, or I can give you my cell number, which is, I don't know, we put it in the chat, I guess, 708-205-5110. That is my, okay, see. Can you repeat that 401k tax twice if you die? So I answered that, James. Here's another question. Do you need a securities license to sell index annuity? No. All you need is a life license. That is the most powerful thing. I don't need a securities license to sell an index annuity and to help people with guarantees. Now the index annuities is, this one has a bonus, but there's others out there that can create an income stream that you can never outlive. Okay, we got about a couple minutes. Any other questions?
What was the phone number? 708?
708-205-5110. Colleen put it in the chat. Thanks.
Thank you.
Yep.
Appreciate it.
No problem. 708-205-5110. That's my personal cell. Anything I can do to help you, just let us know.
I'll send it out with the recording as well.
Okay. Any last questions, guys? All right. I hope
Awesome. Thank you so much.
Thank you.
I
Fabulous.
hope
Thank
you guys
you, LaRoy.
Thank you,
learned
LaRoy.
something. And yeah, let's go out there and make it happen. All
Awesome.
right. Okay.
Definitely good
Thank
stuff.
you.
Thank you. Thank you, guys.